Hi, I'm Michael Lemon, and I'm pitching UIL Holdings Corporation, ticker UIL. Right now, the current share price is at $37.23. My fair value estimate is $47.44. Our portfolio currently has 0 shares in this company, and I am recommending to buy 50K, which is about 1,350 shares. A little bit of company background. The company's primary business is to take ownership of regulated utility companies. UIL Holdings, through subsidiaries, undertaking transmission, distribution of electricity and transportation, distribution of sales of natural gas. Its subsidiary, United Illuminating Company, provides electricity and energy-related services in the greater New Haven and Bridgeport areas. And the other subsidiaries, namely Connecticut Energy Corporation and Southern Connecticut Gas Company and Berkshire Energy Resources, undertaking the gas operations. The company also holds 50% partnership interest in GenCom Energy LLC. Some of the main catalysts as to why I believe the stock price is going to rise is the strong customer base. The UIL has a strong customer base in Connecticut and Massachusetts, where it has active presence in purchase, transmission, distribution, and sale of electricity and natural gas for residential, commercial, and industrial customers. UIL covers approximately 335 miles in southwest Connecticut, largely consisting of urban areas including major cities such as Bridgeport, Hartford, and New Haven. Another catalyst as to why I believe the stock's going to rise, probably the most important one, is the acquisition of Philadelphia Gas Works. On March 3rd, UIL officially announced that they have reached a definite agreement to acquire PGW for $296 billion. Philadelphia Gas Works is the nation's largest municipality-owned natural gas utility. Approvals will be needed from Philadelphia City Council and the Pennsylvania Public Utility Commission. I anticipate these to be closed by the first quarter of 2015. The last catalyst as to why I believe the stock price is going to rise is the positive U.S. electricity market. Electricity consumption levels are set to grow in the U.S. considering the long-term power demand has been increasing in the U.S. as a result of rapid population growth and increasing use of air conditioners, refrigerators, and televisions. Right now, if you looked at it last year, I listened to their earnings call. They added almost 15,000 households and businesses in 2013, which was 34% more than they added in 2012. And they also stated that their 2014 target is to add just under 16,000 households and businesses. The PGW acquisition will significantly expand the size and scale of UIL's natural gas operations. Acquisition will enable PGW operations to increase investment in infrastructure and expand its services to the greater Philadelphia area. In addition to the residential and commercial customers in the country's 5th largest city, will significantly enhance UIL's scale and financial profile with more diversified cash flow and asset mix. UIL intends to issue long-term debt and equity in amounts consistent with maintaining investment-grade credit ratings to permanently fund a transaction, capitalize a new operating subsidiary at close. The electricity sector right now, the growth remains relatively slow as increasing demand for electricity services offset by efficiency gains from new appliances standards and investments in energy efficient equipment. Electricity demand can vary with different assumptions about economic growth, electricity prices, and advances in energy efficient technologies. SWOT analysis: the strengths are the supporting business units and strong customer base. Weaknesses is they do have substantial debt. The opportunities is the positive U.S. Electricity market and their capital expenditure plans. And the threats are just legal and political framework and government regulations. Looking at a competitor analysis, UIL Holdings' market cap is much smaller than the few of its major competitors. but that's because their major holdings were acquired not long ago, and they plan on expanding geographically in the future, as we stayed in Philadelphia. The ratios look pretty good compared to the customers, and they've always had a strong dividend yield compared to their competitors over the past few years. Again, the thesis on most catalysts that I'm predicting to why the stock price will rise is because the Philadelphia Gas Works acquisition that should be closing soon, a strong customer base, and the positive U.S. electricity market. Again, the current price is $37.23. My target price is $47.44, which is a 27.42% upside, and I'm recommending that we buy 50K.